Good morning, ladies and gentlemen. Welcome to the first of a four-part interview series titled Winning Over Volatility, organized in association with Mirae Asset India. In this series, we discuss how you can manage your mutual fund investments amid the economic downturn. I have with me Mr. Swarup Mohanty, CEO, Mirae Asset Investment Managers India Private Limited. And the theme for this episode is Should I continue with my SIP during an economic slowdown? I think this is an important question in the mind of many of our readers. We also, shared this on social media, and we have a few questions that came on social media from our viewers. We will be taking one of those questions as part of the interview today. Welcome, Mr. Mohanty. It's a pleasure to have you here today.
No, thank you for having me on the show.
Thank you, sir. You're welcome. The first question to start off, because of panic and a volatile market, individual investors who participate through SIPs are either redeeming or discounting their investments. Is that the wise thing to do?
I think some amount of a thought does come to the mind in such volatility. These are definitely very abnormal times, and some of us would have never seen it before investing. So some of the thought is quite logical. But see, every SIP is done with a goal in mind, and every SIP has a path. Stopping it would also mean derailing yourself completely from the path, right? And from an SIP perspective, volatility remains the best friend of an SIP investor. These are times when you accumulate units at a far cheaper price, and what we call the biggest advantage of SIP being rupee cost averaging plays out here. And when you look at that on the overall journey, the more units you accumulate at a cheaper price, the better the wealth creation is. So I will not comment on people who have cash flow issues. Those are genuine issues. But people who can continue this journey should continue journey and ask them the same question of this pandemic being relevant over a 2-3 year horizon, and then they will get their own answers themselves.
Wonderful. Thank you, sir. So, we have weathered several crises in the past, and we are wiser today. I mean, the last one being the 2008 global slowdown, which was triggered by the US mortgage crisis. What is our experience through these? I mean, how have SIP investors fared in these times?
I'm so happy we are discussing this because probably 2008 was the first brush of volatility for the bigger part of SIP investors in India. And that first one was pretty severe. Nearly 60% of SIP investors had stopped SIPs then. But in contrast, what is happening now is a dramatic shift in the behavior of the SIP investors. Probably they've learned from that entire episode. And let me give you a small example, and this is what we've done internally, a small mathematical study. People who weathered the storm between the most volatile time, that is June 2008 to July 2009, and continued their SIP, actually added nearly 0.8 XIRR return over their possible returns if they stayed invested. I think that's something which people have learned and have taken to that very well. We are not seeing much stoppages in the SIP this time around, seeing that. And that's such a wonderful thing to see the maturity of the Indian investor.
Wonderful. So the other thing is, so of course consumption is down right now, and because most things are closed, people are not going to their offices. That means that many of us, many investors, have a lot of idle funds with them, and they will be looking for avenues to grow their capital. Do you think, or would you advise them to look at mutual funds and SIP route for mutual funds? In this case, are there specific things within mutual funds that they should also be looking at?
I think when these are the times when you get to know your need versus want. And due to the lack of us being able to spend anything in the want space, that throws up a great opportunity for us to first restructure our expense statement. I mean, a lot of things which we thought were really desired by ourselves in life is actually not being there, and our life is continuing so well. So the first thing is to restructure the expense statement and make it more realistic. And that difference in that, or the surplus that we get, gives up a lot of opportunity to use it wiser, or in a wise manner is what I'd put it. So, the other thing that I'd like to mention is, while in this whole thing of SIP, these are great times when, the margin of safety for investing in equity is pretty high, and so one could also look at investing in the lump sum manner. At the same time, when from a trigger perspective, this is also a great time to start SIPs. And then look at it, somebody who has had goals and probably is derailed from the goal, with this surplus can now actually come to a conclusion of how much he has derailed himself or herself with and top up the SIP. So all opportunities are there, all possibilities are there. It is up to the investor to look at it mathematically and rationally and take the corrective action.
So to sum it up, is there a silver lining in this situation that you would want to highlight?
See, when you look at such crisis over the last 25 years, such crisis has only come 5 times. It's not that a crisis comes often, and it's how you approach the crisis. If you approach it rationally, which I do agree is a difficult thing to do, and look at investing with a proper goal and in a very systematic, mathematical way, this volatility can be your best friend. Please remember, for investing in every volatility lies some opportunities.
So as I mentioned, we put up a few posts asking for questions on social media on our LiveMint channels over the past few days, and we are taking one question from our reader Ashish Karbor, and he asks, isn't it better to do a lump sum investment right now instead of an SIP when we know that the market is significantly down? Won't that give me better returns in the long term? I think you partially answered that question, but
no, I'm so happy, and that's the maturity I'm talking about. I'm so happy with this question of Ashish. Just shows the change of the way people have started thinking. A point to ponder is, while people are doing SIPs in a continuous SIP route, somewhere, your risk-taking ability also goes back a little. That's a thing which somebody needs to think about, and I've always thought about this from an investor behavior perspective. If one has to do lump sum, these are good times for lump sum. I completely agree. I'm so happy that people have started talking like this or thinking like this on equity as an asset class.
Thank you, sir. Thank you for helping us kick off the first episode of our series, Winning Over Volatility, on LiveMint in partnership with Mirae Asset Management. That's all for today. Thank you, everybody, for tuning in. Thank you, Mr. Mohanty, again for this insightful discussion. We'll be back again with the next episode. Stay safe and keep watching.